Welcome to Earnings Central. In this video, we'll break down Microchip Technology's second quarter of fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. Let's get started. Starting with top-line revenue, the original estimate for Q2 was $1.15 billion. However, the company reported $1.16 billion, surpassing expectations by 0.99%. This quarterly revenue marked a 48.4% decrease compared to the $2.25 billion reported in the same quarter last year. Moving to adjusted earnings per share, or EPS, the original estimate for Q2 was 43 cents. The company reported an EPS of 46 cents, exceeding expectations by 5.94%. This result reflects a 71.6% decrease compared to the $1.62 reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. While the company faced challenges due to macroeconomic uncertainty and inventory corrections, it remains confident in its long-term growth prospects driven by innovative products and a strong customer design pipeline. Microchip reported a non-GAAP gross margin of 59.5% for the quarter, which was just above the midpoint of the company's guidance. On a GAAP basis, the gross margin was 57.4%. The company noted that capacity underutilization charges of $25.9 million impacted the gross margin during the quarter. The company's non-GAAP operating margin came in at 29.3%, reflecting its efforts to manage expenses in the face of the current business environment. Microchip's inventory balance at the end of the quarter stood at $1.34 billion, up $31.6 million from the previous quarter. The company reported 247 days of inventory, an increase of 10 days from the prior quarter. Management expects both inventory dollars and days to increase in the upcoming December quarter. The company generated $14 million in adjusted free cash flow during the quarter, which was impacted by the timing of interest and tax payments, including an annual transition tax payment. Microchip's net debt to adjusted EBITDA ratio increased to 2.85 as of September 30th, 2024, up from 1.28 at the end of the previous quarter. This was due to the higher tax and interest payments during the quarter. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Microchip acknowledged that the company is navigating a challenging macroeconomic environment, with customers managing their inventories tightly and adjusting their purchasing plans. This has resulted in an uneven pace of recovery, with bookings remaining stable but aging over shorter periods of time. While most regions and end markets exhibited varying degrees of weakness, the company noted that its business in aerospace and defense, as well as the artificial intelligence subset of the data center market, have remained strong. Microchip is actively managing its expenses by balancing short-term realities and long-term growth opportunities. The company has also paused its internal capacity expansion actions and expects capital expenditures in fiscal year 2025 and 2026 to be at or below the low end of its long-term range of 3% to 6% of revenue. Despite the current challenging environment, Microchip remains confident in its long-term growth potential, driven by innovative products and a strong customer design pipeline. The company believes that as the inventory correction cycle runs its course, its solutions will continue to be the engine of innovation for the applications and end markets it serves. Microchip is committed to its capital return strategy, targeting 100% of its adjusted free cash flow to be returned to shareholders through a combination of dividends and share buybacks. While the company may need to temporarily increase borrowings to pay the dividend in quarters where adjusted free cash flow is lower than the dividend, it plans to repay those borrowings in subsequent quarters. In conclusion, Microchip Technology's Q2 2025 earnings report highlighted the challenges the company is facing in the current macroeconomic environment, but also showcased its resilience and confidence in its long-term growth prospects. The company is actively managing its expenses and capital expenditures, while continuing to invest in innovative products and solutions to serve its diverse customer base. As the inventory correction cycle runs its course, Microchip remains committed to its capital return strategy and believes it is well-positioned to capitalize on the growth opportunities ahead. That wraps up our recap of Microchip Technology's second quarter of fiscal 2025 earnings call. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.